Welcome to this video. By the time you're watching this video, I expect that you've covered some material. This video is going to be on preparation of financial statements for a company, and it's going to be an introduction to that. And what I expect you would have already covered by now is that there are three types of businesses. So the business types that are there are a sole proprietor, a partnership, and a company. And for a company, you could have a limited liability company and a public limited, a private limited liability company and a public limited liability company. We're trying to see how we prepare what are known as financial statements for this type of businesses. By now, you should have also covered that before you get into preparation of these financial statements, you start by recording information in source documents. This information in the source documents is then transferred onto books of original entry or books of prime entry. It's information from these books of prime entry that's transferred into the ledgers, and then the information from the ledgers is transferred to a trial balance. Now, what we haven't covered by now is that you can then transfer this information to what are known as financial statements from the trial balance. So financial statements. Let me be quick to mention here that these pieces of information we have here are normally kept internal in the business, but these are often published to the public or to people outside the organization. There are a number of financial statements that a company produces. The main ones are a trading profit or loss statement, also sometimes called a trading profit or loss account. There's what's known as a balance sheet, also called a statement of financial position. And then there's what's called a statement of changes in equity. And finally, there's what's known as a statement of cash flows. So for the purposes of your syllabus, this and that are going to be critical, and then we'll look at these in a bit much more detail later. So for now, I need you to ensure that you're okay with this. And to start with, I will do what's known as a trading account, which is part of a trading profit or loss account. So to prepare this, like I said, we need to use a trial balance. So we have typical trial balance here. I extracted this from Frankwood, and it's a trial balance for a company known as S. Preston, and it's an extract, so it doesn't show all the transactions, but it will show all the transactions that are relevant to what we are talking about right now. The question says prepare S. Preston's trading account. To do that, I want to start a new page and always put the title on top, or the name of the company I mean. So we are looking trading account is going to be prepared from January 2009 to December 2009. So it's going to be for the year ended 31st December 2009. What you want to do next is look at the currency that we're preparing the financial statement in. That's very important. So if you look at the financial statement, you will notice we're preparing the amounts in pounds. So you want to put the currency on top there. Okay. So we're preparing our financial statements in pounds, and the next thing you want to do is follow the format. So the way a trading account is prepared is that you start with your sales. So if we go to our information there, our sales were right there, 28,000. So put 28,000 here. Then it's not always that when you buy goods you're going to, when our customers buy goods, they are going to be satisfied. Some of those goods may be returned, and so you may have what is known as sales returns or returns inwards. So sales returns are also known as returns inwards. If you look at our question, we had returns inwards of 550. So put the 550 there and subtract those. If you get a calculator and subtract those, 28,000 subtract 550 to give you 220. Just again, 28,000 minus 550 to give you 27,450. So put that there, 27,450. This is known as your net turnover. Okay. After you calculate your net turnover, you want to calculate what's known as your cost of goods sold. Okay. So you've calculated how much you sold, but what was the cost of those goods that you sold? To calculate your cost of goods sold, you start with your opening stock. How much goods did you have when you were starting the year? And opening stock is also known as inventory. So if you look at the beginning of next thing you want to do is, not all goods that you purchased were good, so you might have returned some. So you have returns outwards, also known as purchases returns. So returns outwards, when you go to the question, were 320, so you put them there. And if you're subtracting them, notice every time I'm adding, I'm not putting the figures in brackets, and when I'm subtracting, I'm putting the figures in brackets. So if you go on top there, you're going to notice that I put the 550 in brackets, and here I put the 320 in brackets. But when I'm adding, like the 240, I don't put it in brackets. That's an accounting convention. So every time you see brackets, think of it as a negative or subtraction. So here, 2990 minus 320 will give us 20,670. So we'll get our 20,670. Now finally, you had open in stock. At the end of the day, you might have some stock that you haven't sold, and so this cannot be our cost of sales. We need to subtract everything that we haven't sold. So we're going to say less closing stock or closing inventory. A word of caution, you will not find your closing inventory in your trial balance. So in a case where you have a very long trial balance, here it's short, but if you have a lot of transactions, a lot of things going on in the company, and you have a long trial balance, you might find that you spend a lot of time looking for the closing inventory figure. It will always be below the trial balance, outside the trial balance. So here we're told that the closing inventory at 31st December is 4,300. So we pick it up and put it there, 4,300, and we are subtracting that 4,300 from the 2,670. It gives us 16,370. This 16,370 should come here, 16,370, and it is the cost of goods sold. Okay, so that figure we're looking for on top there is the 16,370. What we do now is subtract the net turnover. So let me just point at that for you. So we're going to subtract the net turnover, which is here, and we will subtract the 16,720. Like I said, when we're subtracting, we want to put this in brackets so that what we find is what is going to be known as gross profit. So if you've heard of gross profit, that's what it is. So 16,370, I will say 27,450 minus 16,370 is going to give us 11,080, and that 11,080 is known as the gross profit. This statement you are seeing from the top here, from the sales to the gross profit, is the statement that's known as the trading account, and that will be all for now. In the next video, we're going to extend from just a trading account to a trading profit or loss statement. But for now, we've done part